Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
What's at stake for Bitcoin if the Fed prints more money? Well, let's dive into it with the Bitcoin Bulletin. You might have seen a recent interview between Federal Reserve official Neil Kashkari and CNBC, where he mentioned the Fed has tools to provide more liquidity to the market, which Crypto X instantly interpreted as a vow to print dollars. But is that really what's going on? The truth is, it's unclear if the Fed will use those tools to add liquidity to the market. Agency officials continue to reinforce the idea that they're not in a hurry to take any action regarding the ongoing tariff chaos. The Fed wants to see the results of negotiations between the U.S. and other countries, Kashkari says. And with U.S. core CPI inflation rate back below 3% for the first time in 4 years, it seems like that's exactly what they're waiting for, a chance to cut interest rates again. But here's the thing. The Fed is satisfied with the improving CPI inflation rate and won't prioritize any other task before fulfilling its mission of bringing inflation to a 2% rate. And that means no rush to cut interest rates, at least not yet. Now, Trump wants to weaken the dollar to boost exports and offset the trade deficit. But Kashkari doesn't see the trade deficit as something extraordinary for the U.S. The disagreement between Trump and the Fed chair, Jerome Powell, has been a slow-burning conflict that's left many wondering what's next. One thing is certain. If the Fed decides to draw liquidity into the market, it's not clear which method they'll use. But one tool that Kashkari mentioned is standing repo facilities, a backstop measure that keeps overnight interest rates in check and provides liquidity in the form of Fed funds against U.S. Treasury debt and mortgage-backed securities. This raises some interesting questions about Bitcoin, as it's powered by chaos, its supply increasing over time, but with new units hitting the market at ever-declining speeds until eventually reaching the 21 million mark. That makes Bitcoin different from fiat money printed by central banks. As a top crypto with a fixed supply, Bitcoin may be seen as a hedge against inflation. Its inclusivity, global accessibility, and independence from governments make it a store-of-value asset that can accumulate value in the long term, a characteristic that sets it apart from traditional investments. So what's at stake for Bitcoin if the Fed prints more money? Well, one thing is clear. It could be an opportunity for the crypto market to thrive during times of economic turbulence. And with its unique characteristics and fixed supply, Bitcoin may just be the hedge we need to protect our wealth in uncertain times.